What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy Daily Stream, where we bridge the gap from beginner to pro, bringing you that high-level alpha, but also breaking it down, doing small lessons, throwing that rope back for beginners all throughout the stream, so making sure that we can bring people along with us. Because remember, as this space grows, we regularly get a disproportionate number of newcomers as opposed to people that have been in the market. So anybody, if I am talking about something, you're like, well, this is way below my pay grade in terms of maybe you're much further along. Be patient. Be a part of the community that can also help answer questions for people in the chat. We all need to do this together if we want to see crypto grow. And it's in these boring times. We're having this consolidation right now in Bitcoin. It's during these boring times that provide the best setups for some of the most legendary moves in the market, so that you, if you're paying attention to the signals, if you're paying attention to the data, not being bored by the price, you can see that there's opportunity waiting for you to change your lives. And that's what this is all about. My name is Kellam. Thank you for being here. You can find all my information, boom, 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 right there. And if you haven't yet, hit that like button, hit that subscribe button, ding that bell. Let's go ahead and get a brief little market look here, and we're going to dive into a bunch of stuff. My window just disappeared. There we go. We're looking here at Bitcoin, the one, the only. Let's go ahead and zoom out on this. All right, zoom in, I should say. So price, we're sitting right at a key level. We've talked about it a couple of days now. This has been, what is this, over 900 days? Okay, we're sitting here at a major resistance level. So it stands to reason that the price is not only not getting rejected like it did before, but now is consolidating. How long has it been consolidating at this level? Let's see. It's been 20 days. So we're 21 days. So nearly 3 weeks at this level. And interestingly, we've got, look at this, $500 million has poured into the Bitcoin funds in the past 3 weeks. So this is a wonderful headline and data point that ties in exactly with what's going on right here. We're seeing price being held here because people want to be a part of the narrative. People want to be a part of this narrative. Now, that's a good thing and a bad thing. What's the narrative? The narrative is a stamp of approval that's come from Larry Fink's spot ETF application for BlackRock, as well as his press junket, where he went out there and basically on a nationally broadcast television and said, on a major news network as well, and said, listen, Bitcoin is an international asset. It's good. Everybody look at it. He didn't say those specific words, but that was the context of what he was signaling to everybody out there, because he is one of the biggest has one of the biggest impacts on global markets because of the fact that he runs the largest financial institution in the world. Over $9 trillion in assets under management. And we're seeing now, just like this headline says, over $500 million poured into Bitcoin funds in the past 3 weeks. Now, remember, yesterday we talked about the $2.15 billion that has basically the sharks and the whales, the Bitcoin wallets with 10 up to 10,000. So from 10 Bitcoin up to 10,000, those wallet addresses have scooped up over $2 billion in Bitcoin. And separate from that, we see this headline here. $500 million has poured into Bitcoin funds. What's important about this? This is the other side of it. This is the institutional side of it. This is also not only institutional side of it, it's people that are trying to get Bitcoin exposure and have some sort of, I don't want to say market experience, but they interact with the market differently because they're participating in the traditional finance route of getting exposure to Bitcoin. So we're getting a broad focused, positive sort of sentiment that we're not looking at just a sentiment. The sentiment here is being signaled by the actions of the investors participating. So this is major. And when we're looking here at Bitcoin price and we zoom in on this, we see the price is consolidating right at this level. We're trying to get a shakeout, or I shouldn't say we. The smart money is trying to get a shakeout. Coming down here, see, this is a little bit of a worrisome factor to me. We do have this lower low here. We have consecutive higher highs. We have a little bit of a lower high here, but broadly we have these higher highs, and now we have this lower low. And what does this remind you of? We look back over here. Look at this, lower low, lower high, crash. Lower low, lower high. I mean, and just And I'm not suggesting this is actually what's going to happen. I don't mean that because of this, we are going to get a dump. But I just want to say, as bullish as I am that we're consolidating at these levels, a known, very important level, this region right here, the fact that we do on a price structure basis, yes, we're making broadly higher highs and higher lows, but on this smaller range, what does this suggest to me? This suggests to me that we have a lower high, we have a lower low right here, and followed by a lower high that the bears ate up rather quickly. What am I saying by that? When we see this wick here, this means the bulls, this candle opened right here. How do I know this? This is a bullish candle, meaning the price opens on the down here, and the close of this candle is above where it opened. This is a bullish candle. But this wick indicates that price action during the time of this candle, on this daily candle, this means that price action came all the way up to here, and the bear said, no, 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 and brought this all the way back down here. Now, depending on how this candle closes, could indicate that this may be rolling over. We could go sideways further, whatever the case may be. But I want to just point out that as bullish as I am, I pointed this out yesterday on the BitBoy stream when I was doing TA as well. As bullish as I am, there may be a small pullback in the cards to flush out any of that overhyped liquidity and do a little bit of an institutional smart money grab, buying from the emotional traders with the price, with the Bitcoin price flushing out to the downside, only to basically end up being a spring to launch to the upside. So make no lie, make no confusion in your brain. When I say price may pull back, I'm not being bearish. I'm actually ultimately saying, watch out for the manipulative nature that these markets move in that are specifically designed to get you to trade emotionally. We don't want to trade emotionally. We want to trade with data. We want to trade with strategy, or we want to trade with a plan. Part of that plan should be risk management. Part of that plan should be knowing what trend you're in. In order to know what trend you're in, you got to look at multiple time frames, right? So let's go ahead. Let's zoom out here. Let's look at the weekly. Man, that's looking very bullish without even going all the way down. Very bullish. We are at a known level. This does look like it's attempting to roll over a bit. We have the volatility. This is the BBWP, the Bollinger Band Width Percentile. This is showing when it's very high, it's an expansive volatility, meaning there's been a large movement over the last 20 days. And we see when this comes down, when this contracts all the way down here, this is suggesting that the volatility has comparatively shrunk. And we see how big this volatility was, and then all of a sudden we're getting smaller and smaller volatility. This is on the weekly time frame, of course. Now we see when this comes down here, we got a bounce up. This expanded a little bit, and then once this came back down, in this region right here, we see the BBWP got quite low again and kind of constricted, started moving up, and then we got this explosion. This is on the weekly. Let's go ahead and look at the 3-day. Let's go ahead, progress down our time frames. So we're looking at the time frames and understanding what the narrative is across multiple time frames. Because you could be trading on the weekly, but if you're trading on the weekly and then you come down here all the way, already to the 3-day, look at the difference in the BBWP down here. So the weekly, this is quite low. The 3-day, this is actually looking like it's rolling over. Okay. Now we come down to the daily. This is all the way down at the bottom again. Let's come down to the 4-hour. We see this is also rolling over. So this is not a directional indicator, by the way. This is showing expansions and contractions and volatility. Now, if we look at this in the same light with, for instance, like the standard indicators like stochastics, RSI, money flow, if we come back out to the weekly, we can see on the weekly, money flow has been coming up, kind of contracted a little bit, came up, but we have a lower high. We have a lower high here. So we have bearish divergence on the money flow on the weekly, which is not an exciting thing to talk about. We have bearish divergence also on the stochastics. We also have bearish divergence on the RSI. What do I mean by these divergences? It means that this RSI is higher here than it is here, whereas price action, let's see, price action is lower here than it is here. Now, this is a very slight divergence. It's more pronounced on the stochastics than it is on the RSI, but we're seeing just some underlying, I won't even call it, it's not strong weakness, but there's underlying uncertainty with this weak level of divergence. there's uncertainty, and this makes sense because we're at a pivotal portion of the market where some people want to claim that as soon as this came down and touched this area, confirmed this previous resistance as support and bounced off, that we are in a bull market. Well, smart traders, people that make it through, you know, decades of trading, they learn to trade a little more conservatively, and we want to see key levels being broken, and this being a major level of support. We kind of have a bullish impulse, yes, but until we break this level right here, we haven't broken through the gates of what has been 900 plus days of a known level, which can really take us into strong movement after this zone. So we want to pay attention to that. But looking at this on the weekly, we got stochastics all the way up here at 82. Let's kind of take this down to the 3-day, all the way still also up at about 87. Daily, okay, the daily is kind of reset a little bit. It's still coming up, coming back up. It's kind of near the 50 line here. If we move this like this, it's just shy of the 50 line. Similarly with the, okay, look at this. This is actually a little bit more bullish. The RSI is holding above the 50 line. If this kind of on the daily, if this breaks down below this, we may be getting that flush out. Come down to the 4-hour. We can see holding right at this level, but on the 4-hour, we see money flow coming up. So this is kind of contrary to what we were looking at with the potential pullback to the downside. But the longer we stay at this level and the bulls don't follow through, the more sort of, you know, the bear has been rested and now it can come out and swing harder because the bulls are getting can potentially get exhausted, excuse me, by holding this level, because they're not getting any follow through. Not okay. Here failed. Here failed. Here a little higher, failed further. Here a little higher, failed. Here failed. The bear, it's like you're boxing. And when you're at a level and you're just swinging, you're not getting follow through, then there can be some indecision in the market that can be taken advantage of from the smart money, from the big money. So we need to pay attention to that. So we're going to get back into some TA here in just a moment, but I'm going to come back over to everybody right here. We got 138 people in the room, 92 likes. Hit that like button, hit that subscribe button, ding that bell. I love each and every one of you. Thank you for being here. Shout out to everybody that was here, the early birds. I did not, let me scroll back and see if I saw some of the coins that you guys all, yeah, okay, we see. Yeah, we got Gala. We can do some Gala today. Dot, Algo. Early birds, by the way, if you're not showing up at the 10 to 10 to 15 slot, that's where the early birds get to shout out the kind of coins that they want to do some TA on. And that's what we try to focus on. Other than if there's other major movers in the market, we'll look at those as well. Okay, who else we got? Yeah, we got some good stuff in here. All right. So we got some big stuff this week. By the way, we got Caleb Franzen coming back on Thursday. So I'm looking forward to that. But let's go ahead and pull up the basically economic calendar. We are Monday here. We didn't have, okay, we got the FOMC bar speaks. We got today, Junior, small business index. Okay, that's not going to be a huge mover. But tomorrow, this is what the market may be holding on. Everything's been pivoting. Everything's been pivoting and sort of turning on what the monetary policy decisions are going to be. Now, the CPI data is not a monetary policy decision. However, the CPI data is a major component of what the monetary policy decisions get influenced to be. Because this data signals what? The consumer price index. Where is inflation? That's something that we really want to pay attention to. Now, there's some signals out there. There's some signs in the broader traditional markets that are signaling that it's very likely that this will be lower. So this was the last, you see 4% year over year came in. The expectation, I believe this is, yeah, the forecast for tomorrow is 3.1. So this would indicate nearly a % drop. Will it come in under that? Well, that's actually, I didn't bring this up, but let's go ahead and come over here. If you haven't yet, by the way, come over here, give me a follow. Make sure you're following the correct Kelly Kellam. There's only one. Look for that blue check and the hit logo, KELOY, KELLAM. Give me a follow. Come over here to the BitLab Academy page at Academy BitLab. Hit that follow, hit that retweet, hit that like button. Get involved. We do giveaways every week. And I'm going to be ending that sometime in the near future. But I do have a project in the works that we may be able to keep that going. So I'll let you know on that. But this is still going for now. We've given away $100, given away 3-month membership. We've given away lifetime memberships. We've given away all kind of stuff. So come over here and get involved. But what I want to do here is come to Caleb Franzen. He put out some really great data the other day that could indicate likely where we're going. And I want to point out, everybody, I am all about Bitcoin, Ethereum, Cardano, XRP, the broader digital asset ecosystem. I'm all about it. About 95% of everything that I have on this world is in the crypto markets. But the reason why I'm looking at CPI is this boring, inflation metric. No, the reason we look at this stuff is in order to efficiently and effectively move through markets and investments is to look at the pressures and the different factors that are weighing on them or supporting them. And monetary policy and what's going on, especially in this very contentious time this last 3-4 years following the global economic shutdown, things have still not gotten to equilibrium. We had inflation go absolutely out of control. And because of that, we've had a huge amount of quantitative tightening, which Bitcoin has never really seen before, meaning money being pulled out of the market, meaning tightening of the monetary policy, meaning less liquidity in global markets. So if there's less liquidity in markets, then are people going to be taking money out of the very risky assets or the very safe assets first? Well, the very risky assets. So what we really want to look for, because to be honest, I have to say, as frustrated as anybody may have been at any point of the bear market, Bitcoin has performed splendidly, wonderfully in the face of over $1 trillion coming out of markets, quantitative tightening. It has performed fantastic. We even had less of a drawdown than we've had in previous cycles, even though we have tighter monetary policy in this bear market, in this bear market that we're still working to pull ourselves fully out of. So that should be some good indication about the strength of Bitcoin. The question is going to be, where is it going from here? In order to determine where it's going from here, we need to look at some of these traditional signals. So if you're not following Caleb, give him a follow. We're going to have him on Thursday. Love having him on. Where is the tweet set? It's, give me 1 second. It is, let's see. Here it is. US CPI for June is due on Wednesday this week. Headline is expected to fall from 3.2% year over year, which would make for the lowest print since March 2021. The Cleveland Fed to blah, 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 smaller number. Okay. A similar number. Okay. This is, where's the CPI? There's a Chinese CPI so shelter disinflation's happening. So we're seeing basically apartment rent growth continues to cool. This is the percentage, how much year over year the change was in rents in the U.S. And look how much this has come almost basically back to equilibrium. So that, shelter is a major component in the CPI. And then we come down here. Where's a darn Chinese? So here's another one. The average monthly price of crude oil was down 38.8% year over year in June 2023, a sharper decline than May's 34.7% result. It was down 1.1% month over month. Crude oil has been negative on the year over year basis since January 23, helping to fuel strong disinflation in the headline CPI. So could we see a CPI number that is much better than expected? It's possible. What will that do to markets? If the CPI comes in much lower than expected, whether it's 0.1, 0.2, 0.3% lower than the forecast, which is 3.1%, like say it comes in at 2.7, 2.8, 2.9, that's going to create a lot of volatility in the markets. Now, nobody wants to pick a direction right now, and we can see that. Not only, I don't know how this all works together all the time in the markets, but they tell you, show me the charts, I'll tell you the news. And we can see that we had a strong pump post, basically following the data, the spot ETF applications and then the stamp of approval, and then all this institutional money now basically getting prepared to take advantage of this market because now they feel like they can. But we're also holding at an absolute pivotal level, this level right here. Not only the previous high from right here, we're right in this range, but also we know it's a pivotal range that a lot of support has previously held. So not only are we holding at a known level, we're holding ahead of probably one of the more important CPI data prints that we've had in the last year. Why is this? Because we've known for a year that there was going to be continued rate hikes because inflation was, persistent. But now we're seeing the effects of a year plus ago when the rate hike started. We're seeing that really weigh into the markets, and we're seeing inflation come down. In addition to the other factors like supply chain issues that were, post March 2020 that took, months or even a year plus to start to resolve. Well, as soon as those resolves, it doesn't all of a sudden bring the price of goods down. It takes time for those things to be logistically shipped and then be stocked, and then have the availability of those goods drive prices back to an equilibrium. And then once that happens, it slowly it affects. It's like a domino effect, right? So we're seeing this all come into a place where we're finally at a position now where inflation is quote unquote somewhat under control and declining rapidly. And there's a talk about whether to pause or not, or, if this is going to be basically we're done with rate hikes, or what the argument's going to be within the next FOMC meeting, which is now in 14 days. Okay, I think it's the 25th and 26th of July. It's going to be heavily determined by what the CPI read is, as well as some other metrics, of course. But the CPI read is incredibly important. So if this comes in much lower than expected, there may be no indication for another rate hike. And this is what the markets are thinking when they're like, okay, do we want to front run the FOMC meeting because we can gauge based on the data that's available what they're likely to do? Because this is what you should be doing in markets, is looking forward. And yes, Kyle Owen says, aren't they saying 2 more rate hikes? Yes, they absolutely are. But at the same time, markets are hungry right now, which is very bizarre. And I will agree that there's I don't want to say confusion, but there's an irrational behavior that's happening in markets right now, that people are looking at certain reads that have historically signaled very strong downturns in markets. However, there's also data that has never been able to be historically looked at because it's the first time it's ever happened. And so markets are, I don't know if they're irrationally being propped up. I don't know. I don't know what the answer is, but things are acting irrational right now. And based on the data that's presented, one of the things that we can also keep in mind is that one of the tools that the Fed uses and governments use is narrative. So what would be better for the markets? To tell people there's going to be no rate hike, and then when the good read comes in and there's no rate hike, or tell people there's likely going to be a couple more rate hikes, and then there's a pause? The question here is, and there's no way to answer this until July 25th, if the CPI numbers come in below expectations, what is that narrative going to hold up, or are they going to pause? And I'm actually very interested. I'm not a monetary policy expert by any means, but I'm very interested when we have Caleb on Thursday to talk about some of this, because that will also be following the CPI print the day before, which is tomorrow. So I just want to walk you all through some of the things that are going here. Jeanette says, are we pumping or dumping? Well, honestly, I think whatever happens between now and tomorrow is going to be a basically front running on liquidity grab. If the markets push up, today and break, between now and tomorrow at 2 p.m. If the market actually is it, I think it's not 2 p.m. It's 8:30 a.m. I believe. Yeah, 8:30 a.m. Eastern time. If the markets push up and break a level, I think it's very likely it comes back, and maybe when the CPI prints, then it launches. If we break down, I think it's a flush out. only to get a positive read to then rebound up. So either direction, I'm happy with. I'm sort of sitting on the sidelines right now until we break some key levels, and we'll go over those in a little bit. But we need to be very patient right now because the market is waiting on this read. Yeah. Dixie chicken go down, BTC go up. You know what? It's there's a very strong correlation there. In fact, we can actually bring that up. Let's go ahead, come over here. Let's go to TradingView. Let's look at not only the Dixie, we can look at the Dixie first, dollar index. So this is what's interesting to me. Not only this line here that we've rejected off of, but also this descending triangle that we have a flat bottom of support here. Is this going to come down, bounce back up, and then break down, or is this just going to come down and break through? Well, we don't know yet, but if this were to come down and lose this level, the next level down is, you know, several points down, which is down here at 99, and then the next level down from that is right in this region here, 97. Ultimately down here to 94. If this were to happen, if we kind of pull this up right here, we come over here, Bitcoin USD. I want you to see something. Never get this to work on dollar. But you see, as this goes up, this is dollar index going up. This is Bitcoin price falling. This is dollar index going down. This is Bitcoin going up. This dollar index going down. We're having a little bit of a struggle here. But if the dollar really starts losing some of its purchasing power, this is going to also signal a liquidity flight back to investment assets. And the longer strong ones hold, and we go to those mid caps, and then float into Bitcoin. And Bitcoin's very quickly becoming a sort of, I don't want to say a Wall Street gem, but an institutional gem because of that Larry Fink stamp of approval, as well as the awareness that a spot ETF is likely coming, whether it's in the next month. It's not going to be in the next month. Whether it be in the next 3 months to 8 months, anywhere in that window, the signal is there. One of the largest asset managers on earth, combined with lawsuits with Grayscale against the SEC, combined with ARK Invest, combined with Invesco, combined with Fidelity. I mean, there's so many players out there that the monetary pressure from the capitalist power of these large institutions that do have sway in Washington. And we're seeing a sort of different narrative now because there's different protections in place, especially with the way the new ETFs are written, with oversight and transparency and sharing of data, which is not the best for decentralization, but in terms of the liquidity flowing into the market, it's excellent. So there's not much of an argument that Gary Gensler really has to stand on now to really hold back that ETF. Now, what I like to look at more strongly than the Dixie, when I'm looking specifically at Bitcoin, is looking here at the USDT dominance, USDT.D. Now on this one, is it not showing? Oh, yeah, whatever. But I don't know why this is doing this. Let's go ahead and add it back. There we go. So we can see on this one a direct correlation. Come on. Let's go to a 3-day. There we go. So we can see a direct correlation of when the dominance of USDT goes down. This is this right here. This is the USDT dominance diminishing. Look at the Bitcoin price. When Bitcoin price is falling, what is happening simultaneously? USDT dominance going up. This is actually very strong. I love looking at this signal because what it's really showing is people moving in and out of Bitcoin, but staying in the crypto ecosystem. This means they're selling and it's moving. Those coins are being sold into USDT. And then when they're buying back, of course, that's moving out of USDT back into Bitcoin, other digital assets as well. But we can see right here, USDT falling, Bitcoin moving up. even look at this spike right here. Spike right here is perfectly correlated with this drop right here. Now we've come down. We're kind of in this, kind of came up here and got these two trend lines here, rejected here, finding support here. Will we lose this level? If we do lose this level, I think it's going to be very, very good for Bitcoin price. We could see I put a little bit of an info thing right here. Now, looking at the total two, we can also see that we're holding kind of this sideways range here. The sideways range here that is above a critical level of, this is on the 4 hour. Let's actually go to a daily. Okay. So we're sort of seesawing here. Is this setting up a large, higher low that is going to break this level here? 657 billion. That is a $100 billion infusion back into the altcoin market if this breaks to the upside. If it breaks to the downside, then we've got some, we have some key levels to watch here. If we come down here and lose this level, this would actually signal that there's something major going on in the markets. So let's go ahead and back out of this for a second. We're going to come back to this in a second. Everybody hit that like button, hit that subscribe button, ding that bell. If you have not yet, head over to BitLab Academy, hit that retweet, hit the like button on this as well. This is how you get entered to win. We draw randomly from the days. We got 151 people in here, only 17 of you entered. Basically help supporting the channel while also being entered to win some great stuff. But let's go ahead and go through some of the, oh my God, a freaking massive, I'm talking massive centipede is on the wall over there. I can't even concentrate. This is crazy. I mean, this dude is like 3 inches long. I don't want to. I'm wearing flip-flops today, everybody. Dude, hold on a second. I gotta kill this sucker. I don't know if you can see it. I got goosebumps on my arm. That fucker was, oh, sorry about that. Whew. That dude was, man, what am I in, like the Amazon rainforest or something? Man. Whew. Okay. Wimp boy is back. All right, let's go ahead and talk about some of these stories we want to talk about, and then we'll get back into the context of everything going on. So this is something that is important. I think everybody needs to pay attention to. This kind of ties in with some of the ETF talk. And I'm not a fan of Jay Clayton, but this is, let me go ahead and exit this. Let me make sure my computer, okay, charts and screen. Okay. You should be able to see this.
Can they say no to a spot ETF?
Well,
for how much longer?
Well, it goes to that issue. I think that when the SEC approved the futures-based ETF, they said, let's look at the futures market. We see the surveillance. We see the protections in that market for the end investor that are sufficient. We don't see them in the spot market, so we're going to make that distinction. I think what the institutions are arguing is that those distinctions have gone away, and now the spot product is actually less drag, more efficient for the investor. So if there's not that delta in regulation, not that delta in what I could say efficacy, the spot should be approved. That's the argument that's going on right now. Look, the regulatory process, whether it doesn't matter.
It's been a while already.
It's been a while already. What I would say is this: if they're right, that you can demonstrate that the spot market has similar efficacy to the futures market, it would be hard to resist approving a Bitcoin ETF.
So you could see there, essentially what he's talking about is the difference. And maybe there's some argument that spot ETFs should not have been approved when they initially were. Man, I'm out of breath from that darn centipede. Should not have been approved because of the lack of oversight and potential manipulation. However, with all the things in place now, there's no real argument for not having a spot ETF. So this is great. We're getting pressure not only from the institutions that are trying to get spot ETFs, but this is a former SEC chairman, basically the guy that used to be in Gary Gensler's job. The interesting thing is he's coming out almost like he's in support of, I don't know if it's because he's in support of Bitcoin and digital assets now, or what, or maybe it's just what Gary Gensler are doing is so, it's just so misguided that he has to speak out against it, because his last day in office, he's the one that brought the charges against XRP. So it's going to be interesting to see now that we're having people within government as well as institutions really putting pressure on some of the decisions that Gary Gensler and the SEC is making. Now, the next thing I wanted to touch on is this right here. We talked about it. $500 million is poured into Bitcoin funds in the past 3 weeks. What does this mean? But exchange inflows are also at a cycle low. We talked about this yesterday and the day before, showing that the basically net flow of coins going onto exchange, which provides liquidity on exchanges, aka people have available funds immediately available to be traded. When coins are coming off, when there's a negative net flow, meaning coins going into private wallets, that's contributing to illiquidity in the space, lack of liquidity, lack of ability to immediately trade those. Because what do you do when you're putting your coins that you're not preparing to sell, that you're actually comfortable holding? You have them in private storage. You have them in cold storage, whether it's your ledger or even your private hot wallets, but they're not on exchange immediately accessible to be traded. So this is big, seeing that we're seeing $500 million pouring into Bitcoin funds as well as exchange inflows at cycle low. This is institutions feeling bullish. This is good. Now, Bitcoin is by far the most solicited asset. This is important to know when you're thinking about how you want to diversify your portfolio. As exciting as it may be that you may be able to get exponential gains from some altcoin, protect yourself. If you're really participating in the digital asset ecosystem, there's no reason why you shouldn't have some exposure to Bitcoin, if not a larger exposure than you do to altcoins. Because although it may have felt like in the past cycle that the altcoins have outrun Bitcoin, there's a very strong possibility that these things can run in parity, but also there may be even a huge portion of time or a big portion of time in this next cycle where Bitcoin inflows of liquidity far outweigh the inflows of capital into altcoins, because now we're going to be having institutions behind it. Over $72 trillion from institutions if a spot ETF gets approved, that have direct access to allocating funds towards a digital asset ecosystem. And what is it going to be? It's going to be Bitcoin, because within the digital asset ecosystem, within crypto, Bitcoin is the safest asset. We see here clocking 133 million in buying done by institutions this past week, with weekly inflows for crypto-related investments reaching 136 million. The interest in the top digital asset accounts for astounding 98% of institutional investments. You see what I'm talking about here? The large amount of capital that's flowing in from institutions is I mean, over 9 to 1, 9.8 to 1 Bitcoin. In second place, Ethereum filed a meager 2.9 million. So as big as Ethereum is, they only had 2.9 million in the same week that Bitcoin had 133 million. So it's important to note, to be aware of this. Now, on the other hand, it's also important to note that the market cap of Bitcoin is so much larger than other assets. It is and does need to have a lot more capital to have strong gains in the market. The question is going to be, what is that floodgate going to look like on Bitcoin? And how, is it going to be just a very quick pouring of liquidity into the space that's coupled with retail coming in once we hit levels that it's already past good buy zones? Because we've talked about this a lot. We've talked about this a lot on here. Let me go ahead and go like this. Remember, when we come over here back to my page, none of you watching this should be the people that are doing this, buying at these levels, buying once see, look at this. Once price action breaks previous all-time high, dumb money starts buying because we made it past all-time high. That's not the signal that it's a good asset. The fundamentals, the data, the tokenomics, the transactions, the hash rate, the on-chain data, where the price is at in relationship to long-term holders versus short-term holders. There's so many signals you can utilize rather than being like, no, this is scary. This is scary. Well, if you're scared, then you don't deserve any gains. Look at the data and buy into when the data suggests that it's a good buying opportunity, which is where smart money is accumulating in this whole zone here. Maybe even, if you want to be patient, get that pre-halving pump, let it pull back. Once it pulls back, and what do? Whatever the high is, whether the high is 50,000, whether the high is 40,000. and we start getting a strong pullback, look for the golden pocket. Look for the golden pocket. Let me go ahead and double click on this. Let's say price gets to right here to 35.9. Okay, well, the golden pocket would be option F from here all the way up to this level. Okay, yeah, right in this level. This means the buying opportunity, if it gets up here, is once price gets down in this region back in the 23 to 25 region. I would probably front run this golden pocket somewhere in this region because this was a lot of previous highs and this bounce right here as well. I would probably front run this somewhere in here. But understand what the strategy is and what other people are probably also likely looking at, and take advantage of the data in the market, because we are seeing institutions pour in. We are seeing $500 million coming in from institutions. We are seeing sharks and whales accumulating. Doesn't mean it's going to go up and away from here. We very well could get that liquidity washout. We have to pay attention to what's happening tomorrow. Now, the other thing to consider is looking here, Mt. Gox, you know, the never-ending story here. Mt. Gox repayment date looming. Is Bitcoin in trouble? Let's just kind of scroll down here. The hack of Bitcoin exchange, Mt. Gox, is set to finally repay the exchange creditors by the end of October 2023. So it's between now and October 2023. The now defunct, so it was 4% of all Bitcoin to be issued. The top cryptocurrency bankruptcies as of July 2023. So we can see all of these huge bankruptcies we've had recently, but this is a point here. So there's a bit of an argument here, and I think it's probably going to be a little bit of an equilibrium between these 2 points. So this one says, it's a simple question of what will the investors do? What will the investors do? People that were holding that they have not got their funds back all the way back in 2014 when the Mt. Gox hack happened. Over the last year, we've seen more sells than buys, and many of those who lost on Mt. Gox have moved on past crypto. The chances they hold for more years after everything that happened is highly unlikely. See this right here? I highly disagree with. And thankfully, on this article, they gave 2 different points. On this one, it says, however, many claimants are likely to continue to hodl, hold on for dear life, to be holders. One trader who described himself as a Mt. Gox creditor told Cointelegraph, he stated, when we get our coins, I think we're all going to hold. But when the news hits the world that these coins are going to be released, people who have coins but who are not the claimants are going to sell for fear of the price going down. So just be aware of this over the next 3 or 4 months. As the speculative price action gets moved around with a little bit of volatility, trading on the FUD narratives that come out of this. And if you really think about it, those people that were really involved with Bitcoin all the way back in 2014, they were way, way ahead of the curve. And the price of what it was then to what it is now is improved so dramatically, so exponentially, and they've already been living their life without these coins. I can see, percentages. If we look at an average of what's sold and what's held, I would say overall the average would be there may be a 15 or 20% sell rate or something like that. Because some people are going to sell all, some people are going to sell none. Some people have been buying all the way since back then anyway. They're just going to add those to their portfolio. I think this is the volatility that's around this is not something to be worried about, although it is quite a bit of Bitcoin. According to online reports, Mt. Gox will reimburse its creditors 142,000 Bitcoin. But remember, another part of the narrative here is some of these coins may be sold. But even if 50% of them are sold, we're also in the middle of one of the biggest cusps in history, which is the ability to have institutional adoption in a real way. And what are they waiting on? They're waiting on any opportunity for good buy prices. So they may even be part of some of the FUD narratives to drive the prices down so they can take that money from you. So understand what your strategy is and don't get shaken out of the market because of all this. Now, we talked about this a second ago. US dollar depreciation could spike crypto. We just talked about that. We can look at this in a second. The other thing I want to talk about is something we can be paying attention to is traditional exposure to Bitcoin, because some of the people that are the brightest in the world and some of the people that make the most money do what's called arbitrage, which means looking for prices of an asset in different ways and how you can get exposure to it and buy it over here because it's cheaper here and I can sell it here, same asset, or same sort of exposure to an asset, and you can get it for buying and selling at a different price. So there's a lot of people out there, especially institutions, and a lot of people that are involved in the stock market that maybe they haven't felt comfortable. I mean, I can understand it with some of the cascading failures with exchanges and basically lack of oversight and lack of clear regulation through all this, that maybe they want exposure to Bitcoin, but they don't want to be on KuCoin or Coinbase or BitGet or name the exchange. And this is not disparaging any of those exchanges, but the fear is, you know, Sam Bankman-Fried was on the cover of Time magazine, touted by everybody as the best and the brightest, and then his exchange, and due to his practices, anytime something touches my foot now, I think it's a centipede. It's like when you're in the ocean and a piece of seaweed hits you, you're like, shark, squirrel. But on Grayscale, the Grayscale Bitcoin Trust, which you can buy GBTC on, you know, traditional exchanges, is currently trading at a 27, 28% negative premium, meaning you can get, say you put in $1,000, you buy $1,000 worth of shares on Grayscale, then the exposure equivalent to what you're getting to Bitcoin is actually $1,270. Now, if we look at this over time, this is a better metric. We can see here, this is a Grayscale discount or premium to net asset value. So what this is showing is here there is a premium. You're getting less Bitcoin for your money. Now you're buying this on small shares, but currently it's trading around 19. I think it was $19 or something like that. 1982. Okay. So currently this dropped all the way down to negative 48, negative 50% back here at the end of December. But now it's worked its way up, still a negative premium. But look at the swing here. This is negative 28 today. This was positive 40 back here in December 2021. That's a 68% difference. Without even price moving, if this were to switch, which it wouldn't do, that's a 68% gain in value in terms of the asset exposure that you're getting. So this is something just to watch, especially as institutions come in, especially as the narrative gets broader, and also retail that, you know, there's going to be a lot of retail that starts getting Bitcoin exposure too without being in the crypto market. They'll get it from the traditional asset sort of exchanges, getting stuff like GBTC or buying mining stock or buying MicroStrategy, MSTR, stuff like that. So I kind of come back over to you all. How's everybody doing today? We've been talking. We got 163 people in the room. Hey, we're getting a really good ratio today. 152 likes, 168 people in the room. Let's go ahead and read some of y'all's comments. Kelly, you should have bit the centipede to assert your dominance, or peed on it, right? Now you're looking over your shoulder. I know. Now I'm like, oof. You should have seen me when I lived in Thailand. I'm talking, man, I've never seen bugs like that. Ooh. Creepy crawlies, you know. I'm a city boy at heart that grew up in the suburbs, but when I see something crawling on a wall, it's like, ooh, I feel something going up my back. Is there anything else in here? It must be an Airbnb. What's an Airbnb? Let's go ahead and you guys want to do some TA? Throw a 1 in chat if you want to do some TA. I did see a couple coins in there. You guys didn't give me enough. So if everybody wants to throw in a coin or two, whatever we can run through, we will. I'm going to start with what the early birds said. So let's start with let's do Bitcoin, Ethereum, and Cardano. Then we'll run through and maybe Bitcoin, Ethereum, Cardano, and then we'll run through a bunch of other ones. So coming back onto the screen here, let's go. All right, give me 1 second. All right. So we can see here with this sort of formation, which is kind of not any longer. One of the things that we have to recognize, and I'm going to say bullish and bearish. One of the things we have to recognize is this is also looking like the first third, second third. What would be the third here? This kind of looks like it very well could be a BART pattern, right? Meaning a large, basically liquidity crunch to the upside, basically liquidating people. And then consolidation, and then a quick move to the downside. This could be something that happens. And if this were to happen, look at where this level is. right around all these previous highs, a lot of volume traded in this region. Okay. And this is a trend line that comes from here to here to here. And we can actually move this out just a little bit like this. Yeah. I moved it out just a little bit because I want this to touch here, and this did eclipse down just a little bit, and that's okay. But this region, look at this, point of control. Where were we looking at? Right here? I don't know, but on one of those looks, the point of control moved and it was right here. But all this price level, these are lows, these are highs, these are highs. This is perfectly confluent with this level right here. If we do this, option J, we can actually move this up just a touch, just like that. So we have these bouncing, rejection, and this is right in the zone right here. If this does pull back very sharply, very quickly, this is the zone I'm looking at. Oh, sorry, just like that. Now let's go ahead and pull up our, the still in progress. This is some of the updates. Still in progress, BitLab intelligence. Look at this reversal symbol. Look at this reversal symbol. Man, I'm so excited about all this. You guys got no idea. Let's go over to the daily. Okay. So this is chopping around in this zone. This does have a lower low. We want to watch what happens in this region, especially if we come here, option F, from the top to the bottom. This is right at the 0.5. This could, if this gets rejected at this level, which is, see, this is a golden pocket right here. If this gets rejected at this level, which is also this previous high band that we have right here, this would be a strong signal that if this gets rejected here, starts rolling over, that this is likely going to come down and test these regions down in here. So we want to pay attention to that. Now looking at, let's come down to the 4 hour. Let's go ahead and delete this fib. All right. If this were to come down, again, I'm looking, I don't know why this is there. I guess this is, yeah. This looks like it's pretty solid. Is that really golden pockets all the way down here? Holy moly. Well, this would be a pretty strong pullback. If this came down here, this would be, look at this. This is that level I was just talking about too. I didn't even know the golden pocket was there. This is a level, previous highs, previous lows, all in this region, golden pocket, trend line coming up. This is a strong level. If this were to come back into here, to then potentially have a continuation, or a continuation in some direction after that. But yeah, if this breaks down and finds support on this 382, previous level here, then this will be very bullish. If we lose this level, then we're going to be looking right here, 28.15. If we lose this level, 27.273. On the flip side of that, bullishly, which we still have a case for, if this were, we can go like this, option T, go like this. Look at this. See these highs rejected right here. Bounce, bounce, bounce. We're having a bit of an ascending triangle here where we have the ascending level of support, flat level of resistance. If this works its way back up to the zone and breaks out, then this would be wonderful. Let's all hope for that, but we can't trade specifically on that. If we get back up to this level, I wouldn't start along from here, but we get up to this level, we start seeing a lot of strength and we break through the zone. I think it's gonna be a very quick movement up to this sort of level here, up to about 33.7, 34,000. That's what I'm seeing on Bitcoin. Now coming over to Ethereum. All right, now these boxes, these right here, this is the BitLab volume order blocks. And we can see right now, this found support right in this order block. Basically came down and tapped most of this liquidity, came back up, got rejected at this order block, which started right here. We can see that we pushed up into this, and the unfortunate thing about this price pattern is that we have, let me go ahead and turn off the weekly VWAP. The unfortunate thing about this pattern, looking on the 4 hour, is that this is starting to look a little bit like we talked about it yesterday, that's doing stair step like this. If this does break down, the target out of this, which is, I wouldn't even really call this any longer because, let me move that, because this is longer than the flagpole itself. But this is kind of looking like a broadening wedge. And a broadening wedge Yeah. Does this have any relevance? Yeah, look at this. Previous low here. Previous low here. If this breaks down, I'm looking at a target somewhere around 1800, 1820 if we lose this level. Now, if we push back up, we're going to have to contend with 1900 and then next level right above that, 1930. And this is just, I'm not even going to go higher than that because these are two sort of major levels. If we get rejected at either of these levels, then I do think there's going to be a bit more work to be done. Now, if we look at let's look at market cipher. So even right here, look at this. Large anchor wave, smaller trigger wave, money flow coming out, RSI's angled down. If we look at the traditional MACD RSI stochastics, look at this sort of broadening expansion right here. This is fighting to stay above 50. It's actually below 50 right now. Yeah, so if we're not able to break above this, I do think this is coming down. If we look at the current BitLab trading stack, it was overheated right in this zone. We have money flow bearish divergence. We have order block right below us, however, on this look. And the relative extrema was signaling this reversal right here. And now we're getting a little bit of strength shown, very, very tiny. We can see it right here on the significant movement. Relative extrema. Tiny symbol. And that's why this is green, but it's very minimal. I would not even take that as a read. I do think that this at minimum is going to come down and test this 1853. If we lose this level, then likely down to 1800. That's what I'm seeing on Ethereum. Cardano. Let me go ahead and scroll through chat. I want to make sure I didn't miss any super chats or anything like that. I'm trying to make it a point. Anytime somebody super chats, we make sure to call it out, say thank you. I hate it at the end of the stream when I see right as I'm closing that there was a super chat. All right, so Cardano. Look at this W formation. It looks like we broke out a little bit of this kind of ugly drawn, this very ugly drawn. I think it's actually probably more like this because we got touch, this kind of breaks through it. Touch, rejection, and yeah, this looks a little more active. 3 bearish divergences. Relative extrema was hot coming into this. Now we're starting to roll over. We have an overheated zone on the significant movement. What does it show on the upgraded stuff? So, alrighty. Yeah, this is struggling to roll over. We have order. Look at this, pushing right into this order block here from the BitLab volume. See, this automatically paints these zones of likely resistance of support based on liquidity. Not only resistance or support, but almost like magnets also. It's like a magnet to get there to fill that liquidity to only then be rejected. And we see this here. We're pushing up into this known level as well as the order block here, and we're rolling over. And we have now, again, another lower high. Now we have this sort of trend line right here. If this were to break down, I'd be looking, we've got this level here. If this were to break down, I'd be looking not too far below is 28.5. And if we lose that level, 27.5, we lose that level down to 26.7. This is on the 4 hour. But this is looking, you see this boom, boom, boom. If this really has some sort of capitulation event or bad news or another, sharp characterization from the SEC, we do have this potential down here all the way to 20 cents. We have this measured from this boom, boom, boom. You see this? So we want to pay attention to that. This is a very bad bearish price action, meaning like it's a strong follow through. We do have to recognize we are in this falling wedge, and the more likely component of price is if this is lost, if this level's lost, that it comes down to this region right here in this blue box, and that's 24.6. If we do push up, look at this. We have 2 order blocks above us, which is if we break through this, the next one's basically 30.3 cents. If we do work our way up, depending on where it's at, 32 to 32.5 down to 31.5, somewhere in this region here. But I think what's more likely, because we are having the descending level of support, of resistance, that this is more likely, even if it were to go up, to come down first. So let's kind of keep an eye on that. Now let's go to, somebody said algo. So let's look at algo. So yeah, this is looking, look at these lower highs. Look at this lower low. This could be due for a bounce. And what we would do here is we take this high, option T, go to this high, go like this. If this were to bounce or even go sideways, then if this were to bounce, I'd be looking here about 11.7. Yeah, about 11.7 because it's not going to go straight up. About 11.7. But we do have this order block resistance right above us. Look at this. We're right in this range between these two order blocks. Now, if we kind of turn, I'm going to change some of the signals on this real quick. We could see this had money flow bearish divergence, stochastic bearish divergence, momentum bearish divergence, an on balance volume bearish divergence. And there should be another signal here. We were making a bunch of changes yesterday because each you'll see on the new indicator. I don't know why it's not on there. Yeah, you're seeing some of these larger signs. There should be like this right here. See this strong signal? This should have a strong signal right here on top, showing a strong indication that this is breaking to the downside. Similarly right here, because it's meeting some of the parameters that I have set. It's not just divergences. It's divergences, meeting crossing certain moving averages, meaning breaking through a VWAP in a certain level, and an angle of attack with velocity. There's a lot of things that have to be met to get either the weak or the strong signal. This is just the divergences, but we use this in addition to some of the other signals to get a really strong sort of quantitative signaling for, I don't want to call them buys and sells, but strong indications that a buy or a sell setup is present. And so we can see right here, this is breaking down. This is trying to round out. What do I mean by round out? What I mean by round out is this. We see this, this increased. Now this increased, but then now all of a sudden we are rounding like this. Are we going to get some sort of impulse like this and then break down, or get this impulse like this and break out and do something like this? We don't know yet. The market is going to be somewhat hinged on what happens with the CPI print, and likely what's going to happen first is Bitcoin and Ethereum are going to move, and then the liquidity, once those make some movements, the liquidity will then move into the altcoins. But we don't know. Everything's acting very, I don't want to say strangely, but everything's acting very independent right now within the market. So let's see how this plays out. We are breaking to a new low right here. So there is an indication that if this were to break down, let's go ahead and delete some things. Okay. This is, I mean, look at this move right here. Option J, this is the low. If we lose this low, then I think we're coming down to 976. Probably a retracement up to 10 and then continuation lower. But algo has been crushed so hard. For me, I'm sort of a net buyer when I see if this bounces and starts working its way up and works its way through this, especially if we break this key level right here, this is a pretty strong indication that this was likely bottomed and moving up post price action, breaking these levels. Because we got this level here, option J, and we got this level here, option J. So we can see a lot of work to be done, but this is a beautiful setup. We also have a mini W here inside of a larger W. It's all going to be contingent on what this play is right here. We really want to pay attention to that. This is on the 12-hour. Coming down to the 1 hour. Let me go to double click here. 1 hour is looking a little weaker. We are below the point of control here. Let's look at trading stack, the old trading stack. Okay, we're getting undervalued sign here. We have 4 bullish divergences right here. Market Cipher says, look at this. We do have an anchor wave and a trigger wave. Now this is some nice bullish divergence because we have this right here where it's kind of like this, and we have this set up like that. The question is money flow going to continue to, is it going to trickle back up? We have the RSIs together here on Market Cipher, and they're starting to angle up. This is on the 1 hour. So MACD, RSI, stochastics, money flow coming out. Look at this. This is trying to angle up, but even on stochastics, we got a bit of a trend line here. We want to see this trend line broken. If this breaks through, then maybe we do get this expansion to the upside. So I'm a little more bullish on Algorand than the other coins that we've looked at so far. AVAX. Look at AVAX. Okay, breakdown. Look at this. Inverted Bart Simpson came down, came up. We see this dynamic trend. This was clearly bearish. Chop zone, clearly bullish. We're in this chop zone right now, just straight sideways. The question's going to be, what move is this going to make? Now, what we want to do is we're going to take this trend line just like this. Look at this. Touch, 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 touch. Got a little bit of a descending broadening wedge if this were to happen, which is bullish. But if we are able to retest this and come back up, I see a stronger likelihood that this breaks to the upside. We have bullish. We have these two bullish order blocks on the volume here as well. One of the cool things about the new volume that we're going to have, if we come here, we can come to this show volume delta, and we can kind of flip like this, and we can see what was predominant on these orders. If it was bullish buying or bearish selling on the volume that was present on this. And so we can see right where we're at right here. This is has basically a selling volume delta here, although it is a little bit of a spike right in this region. If we break through this, maybe we get a more bullish sort of narrative here and we flip this green. But we can see here, look at this reversal symbol. Came right up. This is interesting. Option F, come up like this. This is bouncing at the 0.5. This is this is bullish. See, because we're bouncing right at this zone right here, these previous highs. If we're able to hold this and push up, I'd be pretty bullish on this. So I'd be looking at an area 1411. Maybe take, if you are trading this like a scalp, in my strategy, I would probably take some off the table. And if not, then I would move my stop loss up, pretty tight, probably about just below where this previous high was right here. If the price action moves up, my stop loss would be moved up with it about right here. And as it breaks past that, my stop loss would be put above this trend line right here, kind of about where this line is. Now, if we move up above that, then our next level up is up here at 15. Actually 1492 and then up to 1535. If we do lose this level, we have this larger level right here, right below us, which is perfectly kind of right in the zone of the golden pocket, which is right at 1296. If we're able to bounce off this, then this could be a stronger play to the upside. If we lose this level, then not only do I think if we lose a level, that I think this is likely to come down and test this liquidity again, this order block down here in the mid 12s. That's what I'm seeing for Avalanche. Matt C., you out of here? Later, brother. Thank you for being here. Man. All righty, let's go ahead. Man, we got more likes than we do viewers right now. That's guess the people are leaving, man. All right, let's look at Quant and then Gala. Quant, look at this, man. By the way, Quant, AJ really got me to look stronger at Quant because of the tokenomics. Really great tokenomics on it. And we can see this is a pretty strong. Look at this zone right here. Resistances, support. We're finding support right here. So we're in this channel of these new resistances and this previous resistance that now has flipped to support. If we lose this level, we're riding right around the 100 frame. The $100 mark. If we lose this level, I think, look at this, 1.618 is perfectly in line with this zone right here. So this is what I'd be looking at if we lose this support zone. If we lose this, I think we're coming down to about 95. If we lose that, then we're going to probably come down and test some of this liquidity down here in the upper 80s. Now, I don't want that to happen, but as it stands right now, look at this, support lines have been lost. It's exhibiting some weakness, but let's look at some of the other indicators. Okay, we do have anchor wave, trigger wave, but we also have the price is higher here as well. We're looking at the 12-hour. Let's get down to the 4-hour. Money flows coming out. If we look at the BitLab trading stack here, look at this. Money flows coming up. Money flows coming up here on the Chaikin money flow on the 4-hour. We do have an undervalued level right here. We do see there's a little bit of contention in this zone right here. We have a smaller trend line kind of like this. We're getting channels within channels. Everything feels like it's just waiting on the narrative, what direction the narrative is going to go. If this does break out from this, we don't have much higher to go before we have the golden pocket right back up here at $1.05. We lose that, we'll probably come back down and test this. So now coming over to Gala, let me go Gala. Okay. All right. I haven't done TA on Gala since it got delisted from Coinbase. That's why that was like that. My eyes just go to these lines, man. I can just see them. Now let's go. Let's go to. This looks very similar to Quant. These two sort of levels. Man. So there we go. This is trying to be a bit of a cup and handle. We could still kind of, but this handle is too long comparatively with this cup. It's trying. You see this right here? There's a little bit of a sideways, very weak inverse head and shoulders. Right here, we have the shoulder, head, shoulders, right? If this were to play out, again, this is kind of be waiting on narrative. This would kind of put it like this, but I do think we would find some resistance in this zone right here. This is actually isn't looking too bad. We are still having all these consecutive lower highs. We kind of held a higher low here though. So is this a little bit of a, no. Here we go. So here we got a fallen wedge right here and kind of with the inverse head and shoulders. So this is trying to make some bullish price action. However, everything right now is waiting on this narrative. We can also see the volume is kind of falling off right here. If we come down over here to the BitLab, actually market cipher, we do have this strong uptick in the momentum waves. If we come over here to MACD and RSI and all this, we look at this. The stochastics are pushing up, and we have we broken this trend line on the RSI? We've kind of broken this trend line on the RSI. So yeah, this is looking stronger. This and algo are looking pretty decent, but it looks like we're kind of trapped in this range. If we do break out from here, then the next level I'd be looking at is right here, probably coming up over a little bit this direction and finding some resistance in this level, because we also have a little bit of a volume gap here. If we kind of scroll this out, you see if we break this level, we have this volume gap, and perfectly right in line with where this is also this descending trend line. So this would be the next level I'd be looking at, and then we can revisit it from there. If we lose this level, it's pretty clear we're kind of we could do it from the candle bodies. Actually, let's see. Let's do it from the candle bodies. Option F, up. Look at this. Golden pocket is right here. This is some pretty strong support. Support trend line mixed with the golden pocket. If we lose this level, then I think we're coming back to test this area right back down here at the 2 cents, 2.03 cents. And then if we lose that, then we're coming all the way down here to 1.7. So that's what we need to be paying attention to. Yeah, man, all these coins. Let's look at Phantom. We haven't looked at Phantom in a minute. How's everybody doing? Bitcoin rejected 30,700. Let's see. We'll do Phantom in a second. Where is Bitcoin? Are we losing some levels? Look at that. So what did I tell you guys? What did I tell you about an hour ago? My fear is that, because I don't want to be bearish, but in the smaller time frames, if we have this lower low right here, coupled with when we're looking at this attempt higher, brought down, another attempt higher, rejected, brought down. If we start coming down, if we lose this level, I would say basically 30,000. If we lose 30,000, I think we're going to be testing some of these lower fibs that we talked about, which aren't too bad. Remember, the 382 is 28.8 essentially. 28.8 is our level, and if we lose that, then we're coming down here to the 28.1. So we just need to pay attention to that. GRT and then Phantom, just because I saw GRT first. Still consolidating in this range. A lot. There's, we still have. If we were to map this out, we still could do it for another 47 days. We wouldn't even be at the apex yet. So just note that. And we can see, man, this is starting to get tight in here. Let's go ahead and turn on our. These reversals are strong. Now, rejection here. We're holding right at this level. If we lose this level, we're like, look at this. Not only this level, but we have an order block right here that we bounced right in. And now we're trapped between these two resistance and support order blocks right here. If we lose this level, we could come down as low as, you know, basically come down as low as about 9 cents. If we're still maintaining this structure, of course, we could break below this and go much lower. But I do think that this is coiling into something. This may make another move higher. But let's go ahead and look at the momentum, the stochastics. Money flow coming up strong, but look at this. Immediately got rejected at the 0 line just above it and then started coming back down. Stochastics, now we have a trend line right here with stochastics. The RSI, now we have a trend line right here with the RSI. If this, yeah, this is getting rejected right at the below the 50 line. This is looking like it wants to make a test of this zone right here, 11 cents even. If we lose that, then we're coming down to about 10 cents. If we lose that, then we're coming down to a little bit below 10 cents, about 9.8 or so. But that's what I'm seeing, everybody. How are you feeling about the markets? Is there anything that you think is a setup that is just like, man, bring back DJ Kelly? Maybe I'm actually DJing at a spot in Vermont in about 2 weeks. But everybody, if you haven't yet, make sure you're checking out BitLab Academy. Head over to BitLab. If you want to get deeper education or share education with a friend or a family, come over here. You can sign up for free right here for the whole free beginner's course of Blockchain 101, Bitcoin 101. And all they need to do is sign up with an email, and basically they get free access to that. If you want to go through the all access with all the courses, and we're still working on a bunch of new stuff. We got over 120 lessons in the current one. You get all access to that and the new stuff with right here. I want all access. You just sign up right there. You can still use Give Me 30 for 30% off your first month. You want our indicators. By the way, with all access, you also have access to the premium Discord. If you want access to the premium Discord and all the courses and all the indicators for about a little over a 30% discount every month with it all bought together, you can come right here, sign up for BitLab Pro. Right here, put in all your info. If you're currently a member of just all access, you want to upgrade, just make sure you're logged in, add this. It will give you 50% off your first month since you are already a member. And then it will charge you at that, that reduced rate, not the 50% off, but the roughly 30% off. I think it's $97 rather than $130 for everything included. If you're not a member, then you can just sign up with this as well. And yeah, big love to everybody. I got to go do some TA today again on the BitBoy Crypto Show. So I really do, and appreciate each and every one of you. Hit that like button on the way out, and everybody make sure, I hope you have an absolutely wonderful day. So without any further ado, I bid you adieu. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLabAcademy.com. Hit that like button, sucker.